The emerging markets have come off significantly from their 52-week highs. However, India has managed to stand out, and it's important to look at the factors that are driving the Indian equities so far in 2021. But before that, let's see how the markets have fallen from their 52-week highs. You have the Hang Seng, which has corrected about 20% from its 52-week high, along with the Nikkei that has slumped about 12% from its 52-week high. Not to mention that the MSCI Emerging Market Index itself is down about 16% from its 52-week high, and important constituents like Taiwan, South Korea, as well as Shanghai, those have declined about 8 to 9% each from their 52-week highs. But like I was telling you, it is India that has clearly stood out with just about 1 to 2% away from its 52-week highs, and also the fact that it is comparable to developed markets, because those are the ones which have been trading very close to their lifetime highs as well. But this outperformance has also led to the fact that India's valuation premium as compared to the emerging market index, that has surged to more than 5-year high at about 60 to 70% premium in terms of its estimate price to earnings multiple as compared to the price to earnings multiple of the emerging market index. One of the key factors that has driven Indian markets in 2021 is the fact that foreigners have been positive on Indian equities. India has received more than $7 billion in terms of FII inflow so far in the year, followed by Indonesia, which has also received about $1.4 billion in terms of its inflow. Some of the countries that have seen an outflow are Malaysia, Vietnam and Philippines, along with Thailand, about $1 to $3 billion each that has seen an outflow. But the biggest of two have come from Taiwan, nearly $19 billion outflow from the FII space, and South Korea, which has also seen an outflow of about $27 billion so far in the year. But coming back to the valuation premium that India commands, technically also, does this mean that there could be a consolidation or a correction for the Indian markets as well? Definitely going by CLSA's Lawrence Palanco, which has released a note in which he mentions that the Nifty managed to set all-time highs during the last week. However, the daily momentum remains below its January highs as well, which indicates that there is a bit of divergence in place that implies the Nifty's uptrend could be in for a ride. The small and the mid cap indices have managed to form a price momentum divergence as well, and both indices, he mentions, are now on the cusp of breaking important support levels. He anticipates that a reversal in the Nifty could be on the cards, and also reiterates his call to take profit in Infosys and Tech Mahindra.